Hey, this is Danielle. Today I'm going to be showing you how I'm managing a losing trade in Meta, why the trade's losing money, and the new trade that I'm going to put on basically to not really roll it out necessarily, but just to reset the butterfly. So, first of all, let's just talk about the NASDAQ. The NASDAQ has some multi time frame squeezes. And what that means is that the NASDAQ is consolidating and has been consolidating for quite some time. If you look at the squeeze tool down here, this line of dots, you can see where it turns white. Okay, that's when the squeeze began. So the series of white, red, and then there's an orange dot here. That is when the NASDAQ is in a squeeze. That's when it's consolidating. What we're waiting for is the first green dot in the series after the series of white or red dots. That's when the squeeze takes off. Now, what can happen when you're trying to trade the squeeze is sometimes it just squeezes forever. This has been squeezing since February 14th. Today is April 1st. Yes, there has been, a momentum move right here and then a little momentum move right here, but you're still in a squeeze. So what can happen is sometimes when you're trading some of these names and you're waiting for a breakout, it just doesn't come, and your trade, what's going to happen is your trade is going to be losing money because options decay in value as time goes on. And so if you're waiting for a breakout and that breakout's not coming, what you have to do is you have to reset your trade. So if you look at Meta, I'm trading Meta because the NASDAQ's in a squeeze. Meta is one of the top NASDAQ names. Meta hasn't been in a squeeze as long. It's been in there since March 11th, but still quite a long time. 3 weeks. That's a long time. I try to be in trades like 2 weeks or less. And so with this Meta trade, what's kind of annoying about it right now, it's down about 40%. When I first put it on, I put it on when Meta was trading right around here. And Meta was almost immediately up about 30-40%. It traded right up into this zone. It hit this key Fibonacci area of resistance, and it's just been down 1, 2, 3, 4, 5, 6, 6, 7 days, not exactly 6, 7 days because that's an up day, and today it's up too. But you see what I mean? Like it's been in a downward trend for 6 days. So what happens when you have a bullish trade on? You put it on right here, it goes up, it pulls back, and the thing is still in a squeeze, still hasn't taken off. And the problem with this trade is that it's expiring in 4 days. Okay. So what you'll see is that this Meta butterfly that I paid $3.62 for, it is now going for $2.14. So, first of all, yeah, it's annoying. It was up 30-40%. Now it's down 40%. This is a pretty small trade. I just, I started off with just one lot on this. So down 40%. I'm only losing $147 currently, but still kind of annoying. Now, why am I going to take this off? The reason why I'm going to take it off is because there's 4 days of life left on the trade. And whenever you're down to those last 4 days, the thing could come back to break even. It also could be positive by the end of the week, but you have barely any time left. If you look at what is possible by this week, you can see that there's a $12 expected move. So let's pretend that Meta moved directly higher, $12. It's trading at like what, 503, 504. If that happened, this butterfly would be pretty much exactly break even because this is a 500, 520, 540 butterfly. And I paid $3.62 for it. So right now, the reason why it's losing money is because this 500 call is out of the money. That is not what I want with my butterflies. I want to set my butterfly so that the first call is going to go in the money when the stock price trades higher. Okay, so I usually like to set my butterflies so that the first strike is just out of the money. With it being, $9 out of the money, what happens is that long call just decays in value, just loses premium sucked out of it, and the premium gets sucked out of it very quickly those last 4 days. So, is it possible that it comes back and, Meta trades higher by $12 by the end of this week and I can get a break even? It is possible. but it's more likely that the 40% loser turns to a 100% loser and I, lose my entire debit. I don't like to lose 100% on any trade, so I would prefer to take a 40% stop loss and reset the trade. Because even in a best case scenario, it comes back to maybe break even, maybe positive if that squeeze takes off. The other thing that's really important to look at when you're trying to reset a trade is, is your idea still good? Because sometimes what will happen is the squeeze will fire to the downside. And in that case, your idea is not good. You're trading a squeeze to what you thought was the long side. It ends up firing short and you're wrong. In this case, I wouldn't really say I'm wrong. I would just say that the squeeze hasn't fired yet. So in this case, I would reset the trade because you're still in a squeeze, you're oversold, you're holding up above the 34 EMA. There are a few signs that, it might not end up working out. And that's really just because you hit resistance and failed. You have high volume going to the downside. But I still think that, it's a good trade. I still think that you have earnings coming up. I just think the squeeze just consolidated a little bit too long. So moral of the story, I'm going to close this one. Okay. So I'm going to take my loss. Now I'm down 43, 44%. You'll see with these butterflies, if the first strike is out of the money, you will lose money very quickly the last 4 or 5 days. So if you're wrong, it's generally going to be better to just get out than wait. Okay, so I'm out of that trade. I took the loss. Now let me look and see what I can do to add another trade. So I don't like, giving it 4 days or less, like I just said. The only reason I would do that is if I had like a 30-minute squeeze or 78-minute squeeze. In this case, what I'm trading is, there is actually a 30-minute squeeze. So I guess if you really wanted to, you could trade the 30-minute squeeze and the 15-minute squeeze, but I generally like to stick to the higher time frames. So for me, the main reason why I was trading this name was because it had a big breakaway gap last quarter after earnings. They've been doing really well over earnings recently. And so what I wanted to do is I wanted to trade a run into earnings. Now you can see that earnings report is estimated to be on the 24th. I was getting in a little bit early. Now at this point, I think it's actually a little bit better timing. And so you'll see that the earnings report is going to fall within this series. That means that Meta has about a 52 point expected move into that time frame. Well, when you look at this series, you might say, well, why don't you just buy some long calls? For me, with this account I'm trading, I don't normally spend this much on a long call, $3,700, $4,000. You definitely can if you want to trade the run into earnings with just a long call. That's the way to do it. But for me, I usually like to go the cheaper route and I like to trade a butterfly. And when you have a butterfly and you can set it up in the monthly series just before earnings, it's actually typically the best way to do it because you get that rally into earnings. You also get the high open interest of the monthly series as well. So if you look at this series, you can see that there's a 25 point expected move. So if you add that to where you're currently trading at 490, that would actually just bring you pretty much right back up to that area of resistance. That's what I like to call the easy target, especially because, it did hit 515 before and it failed. That's the resistance zone. That's the easy target. So I think it's pretty reasonable to target 515, especially with the oversold squeeze. You could try to go for the gold and target 525. That would be the return to the previous high, and then eventually 540. But I think just a return to the resistance zone is going to be a lot better. So how would I set up the fly? Like I said, I like to set up my flies so the first strike is just at the money. That's because when the ticker goes in the money, the value of the fly is going to expand really quickly. So I'm going to start with 490. So that's the first strike I want to use. And then I can place another one here at 515. And then after that, we can Place another one here at 540. So at this point, you have a $25 wide butterfly. This first strike is at the money. The second strike is going to be at your resistance zone, and your third strike is just going to be equidistant. That is going for $5.76. For $25 wide, I think that's really good. You have about 1 to 4 risk reward ratio, which is exactly what I want on a butterfly. And, it's within my risk parameters. So I like that. I'm going to go ahead and add that one. And then basically the way I'm going to manage this is just, I try to go for, like 75% win on the butterfly. So that means if I'm spending $5, what was it? I was bidding on this one, $5.73. So if you're paying $5.75, if you can try to make, let's say $4, if you can make like $3-4 on the trade, I think that would be pretty decent. If you could close it for 10 or 11, that would be even better. But even just making $3 or $4 on it is a pretty good risk to reward ratio. So I would close it. If I was up about 75% on the debit, probably definitely close it if I was at a double. The other place you can close it is if it hits 515. On the flip side, if I'm wrong, if the squeeze fires to the downside, if this whole thing rolls over and dies, then I would target a 50% stop. So 50% stop would be about losing $2.75 per contract. Now, as you can see, I'm not getting filled. So sometimes that'll happen. If I'm not getting filled, I'll just do cancel, replace order. And I'll see, why am I not getting filled? Well, it's probably because Meta just spiked up quickly and I was trying to bid at 573. So let me change it to 579. Come on. Especially when you're trading something like Meta, you should be able to get filled. If you're not getting filled, just look at your options chain to see if the spreads are too wide. With this option, you only have a 15-cent spread. With this option, you have a 10-cent spread. With this option, you have a 5-cent spread. So you really should not have trouble getting filled. But if you do, just cancel, replace. And I mean, you can see that there's a decent spread here. It's not too big, but I think the bigger problem is just that Meta is kind of spiking up here at the end of the day. So that's why the cost of the fly is going up. So, okay, so now I'm filled. So when you're trading right here at market close, that'll happen, especially if the stock is moving. Can't barely even see it on a 15-minute chart, but that will happen at the end of the day when you're bidding your orders and the stock is moving. You might just have to adjust your butterfly a little bit. So that is my management on this Meta trade. I hope you enjoyed the video. Let me know if you have any questions, comments, write them down below, and I look forward to seeing you in the next one.